Okay, so we have gold and silver. They went through one of the wildest drops we've seen in years. Like, imagine hitting record highs and then boom, the rally just collapses overnight. So, gold was trading near $4,090 an ounce, but it fell more than 6.3% in one session only, which is literally the biggest one day drop in over a decade. Silver, down almost 9% at one point, was total chaos. So, what even happened?
Oh my God! Okay, it's happening. Everybody stay calm.
What's the
Everybody
procedure,
stay
everyone?
calm.
What's the procedure?
Stay calm.
Basically, investors started taking profits after this crazy non-stop rally that's been going on since mid-August. They were calling it the debasement trade. That's when investors buy up hard assets like gold and silver to protect themselves from things like inflation, government debt, and the weaker dollar. Pretty much everybody wanted a hedge, and gold came to be the safe haven, right? And it worked. The rally was insane. Gold up almost 60% this year alone. Why? Because you had central banks buying like crazy to diversify right from the dollar, right? Retail investors flooding into ETFs and traders betting the Fed was going to make at least one big rate cut before the end of this year. So everybody jumped on the same train, and yeah, the ride got a little too fast. By September, we got gold's RSI, which is the relative strength index. It was flashing red, totally overbought. That's the market's way of saying, hey, chill. So when people started thinking the rally might have gone too far or too fast, everybody rushed to lock in profits. That's what happened today. Classic herd behavior. Once a few big players start selling, everybody else follows. But there's also a macro angle here. We've seen that recently there's been some positive noise around US and China trade talks, and Trump even hinted a potential good deal with President Xi Jinping. Now, that immediately cools down the demand for safe haven assets like gold, as we all know. And on top of that, the US dollar got stronger, which makes gold more expensive for everybody else. To top it all off, we see this seasonal slowdown in India, which is a huge gold buyer. Investors are rebalancing their massive rally, and boom, we've got the perfect recipe for a short-term sell-off. Now, some analysts are saying that gold prices simply ran ahead of the story, meaning, yeah, the fears about inflation, deficits, and debt are still real, but gold prices locked it in too early. They locked it in too early, and it's like the market got drunk on its own hype. But here's the thing, this doesn't mean that gold's done or that it'll drop forever. It's not even close. Central banks are still buying tons of it to move away from the US dollar. Inflation's still sticky, and even if the Fed does cut rates, that's usually good for gold in the long term. Plus, every time there's political drama, we're going to see this huge global tension and a market panic. Investors will always run straight back to it. We might see this as a big pullback right now, but honestly, that's just gold catching its breath, and it's been on a massive climb for months, up almost 60% this year only. So a reset like this is kind of normal. If anything, it's setting the stage for the new next and maybe the highest, because at the end of the day, gold always finds a way to bounce back. It's literally like the OG store of value before any of the crypto or the stocks, before anything. So this drop could look a little bit dramatic, but it's just part of the cycle. My name's Sofia Cruz, and I'll be back next time with more interesting topics. But before you leave, make sure you drop a like, you subscribe to the YouTube channel, and also follow us on Spotify. Make sure you leave your comments and let us know what you think. And also make sure you share with your friends so everybody stays on top of what's currently happening in the markets.